Good afternoon, traders, and today's video is going to be on Lotto trades, which take place on Friday. Um, every Friday they take place. It's the options that expire that day, so we're going to explain what a Lotto trade is and how we look at them, and then give you 3 trade ideas for tomorrow that I've looked at. So a Lotto trade is a trade where you're willing to lose the full amount of the option because we're taking an option that we're going to buy tomorrow that will expire tomorrow. So if it moves in our direction and everything works out, it usually gives you a nice percentage. If it goes against you, it will go to 0. It's a high risk reward trade, and we're using the contracts that are expiring. I wrote today because you're trading them tomorrow, which is Friday. So let's go over the first trade idea. And we don't know if the market's going to be up or down, what's going on. So that's why we have the calls and the puts. So on AMD, I think the 51 puts at 22 cents and the 53 calls at 18 cents are both cheaply priced and have room to run to become a 100% trade. So let's look at what I'm looking at. So AMD. First, we'll talk about the puts. So let's look at the daily. And you just have to really see here. This is the John Carter squeeze. And the squeeze is showing that it's still in a squeeze and momentum just shifted short. So to the short side. Now we'll go to the 78-minute. These are the 3 charts I usually look at. Okay, on the 78-minute, what do we see? This is called a bearish nested squeeze. So what does that mean? All it means is the price is going down and momentum's going down on the 78-minute. So that's one. So I'm leaning bearish on this, but then again, we have no idea what the market's going to do, where we're going to open. Number 2, what am I looking at? The 30-minute. At the end of the day, it fired short. And number 3, the 10-minute, we really, at the end of the day, got back into this 52.03 zone and 51.62 zone. So I'm leaning short, but we don't know. We have to have an open mind tomorrow to see what the market's doing. So here's our 2 levels, guys, for the AMD trade. If the stock gets above 51.03, and I'd like to see it hold there, okay, your entry would be a crossover. That's going to be, let's see, it'll be hard to show you here. Actually, you can on the last candle. See how the black line crossed over the yellow line? Your entry would be a crossover on the 5-minute chart I use for entries. So if you're taking the calls, the 53 calls, you'd want the crossover to be positive, moving up like that. And you'd want to buy it when the stock gets above 52.03 because that's been a point where it's had some trouble. And then you keep that trade on until momentum dies. So basically, what does momentum dying mean? Let me just show you over here to the upside. Okay, we took it at 52.03, so we're not worried if it goes a little bit of, candle here a little bit below. Now you got it firing off all the way to 52.50. Boom. Your next candle, once you see momentum start to die, that's when you take it off. Another way you could look at when to take it off is when, if you don't have these kind of charts, is simply when the 5 recrosses the 8 the opposite way. That would be momentum dying, and you can take it off there. And that's a momentum shift. Now, don't forget, you can still go back into the trade. This could happen a half hour into the day. It could be one trade there, then you might take the trade again later on. So that is to the upside. To the downside, in order to execute and trigger the 51 puts. Oh, and by the way, I'd be looking for a target on a 52.92 to start on the call side, with then a 53.26 after that, where you could see we have resistance, 53.27. So that's what we're looking for, but it's really a momentum trade. We can get 100, 200%. Now, to the downside, we'd want a break of 51.62. Okay, we went over all the reasons why it's decreasing, so we'd buy the 51 puts. And the prices will change tomorrow morning, so I gave you just where they closed today. But depending on where we open and the theta coming out, the prices of the option will change, but they'll be around there. So what's room? I think we have more room to the downside because we have this squeeze. So dying, this is going to be fading momentum that could actually turn negative tomorrow. There's enough time tomorrow for this to turn negative. And we have the 30-minute also fired short, and I'm guessing the 1 hour is probably, look at that, even nicer. 1 hour hasn't even fired short yet. So we got plenty of momentum behind us to the downside. So I kind of like this to the downside better, but we don't know how it's going to open or work out tomorrow. So to the downside, we'd want to see a break of 51.62. Why is it that level? We had trouble at that level today. That was our double bottom today. Couldn't get past it. So 51.62 is our break. It formed a double bottom and reverse there, but we're back into that tight trading range we closed at. So a break of 51.62, we take the 51 puts. And I honestly think, depending on how the market's working, we have room to the 50-day EMA, which would be 50.28. Our first target would be 50.67, which is the 61.8% fib, and then 50.28 if that breaks. And there is good possibility for that, because when you get a squeeze firing short and the trade's going with you, it's like having extra fuel in the tank to get it there. And this 50 EMA is usually a magnet. So keep an open mind on the trade. Wait for the signals to see what happens. Wait for your entry point. And execute. That's how we'll execute that one. Second trade is Pfizer. Okay, nice cheap options. I like these because it can have a much greater than implied move. Okay, so let's look at the Pfizer chart. Pfizer just had an ugly day today. Very rarely does Pfizer move $1. So we're fired short on the 78-minute. Fired short on the 5-minute. Even though I use that for entries, it should be the 10-minute. Short on the 10-minute, which looks virtually the same as the 5. And fired short on the 30-minute. Let's look at the daily. Daily, we are not fired short. But we're coming up to the 21 EMA. So I definitely think if Pfizer is looking negative tomorrow, we have room to that 21 EMA, which is the mean, reversion to the mean, very fast. And those options will really get nice and juiced up. Let's just take a look at this screen, see if I could show you the options. Those were the 36.50 options. So here they are, sorry about that. So it's 12, 13 cents, call it 13 cents, but the delta is 25. So all you need basically is a 50-cent move, and these things will double quickly. $1 move, these things will really move, if it moves like it did today. Let's get back to the daily just so we can look at it. So I just want you to see this, guys. You got the 21 EMA and you got the 200-day SMA at 36.61. So if it is a down day, it might bounce off of this and then go up. Then we could actually take the 36.50 calls. If it's down, we miss the down move, but then we see it bouncing off these levels. So you should mark those down. I'm actually going to mark them down now. Sorry for the silence. I'm just going to mark the lower one because I have the 21 EMA on all my charts. Okay, so there's the 200 day. If it breaks through that, we're going to get a full dollar move, and those things will really get in the money. So what's going to be our trigger for entry? Let's take a look at the chart. Let's zoom out a little bit. It would really be a break of the low. So a break of the low today, you take the short side. Okay, so 36.87, that would trigger a short. First thing we'd be looking for would be the 21 EMA on the daily, which would be 36, roughly 72. Then I'm 99% sure we'll tag that 200 day at 36.64. If that breaks, we've got room down. Our trigger to the upside, let's just look at the 78 minute. And I'll be posting live on Twitter what I do take and trade. Our trigger to the upside. $36.16. I'm sorry, $37.16. Or if you just see if you see it trending upwards, which you could see on a 5-minute chart. I don't use anything less than a 5-minute chart. Wait 10 minutes always before you enter any trades, any option trades, because the options just aren't settled yet. So far as we have a two-way trade, a break of 36.87. We'll take the 36.50 puts, and a break of 37.16 to the upside. We will take the 37.50 calls. Our target level 37.68 to 21 on the 30-minute, and then we'd probably get to 37.85. Okay. Oh. There's your trade. These were 10 cents, so these were 13 cents was the last sale, so I'll change that for you guys. 13 cents, and these were 10 cents. Okay, now this one work. I only like it to the upside, because if it moves tomorrow, it's gonna go. Let's take a look at work. Sorry about that. Number one, 114.5% average volume. That means it's got some staying power. Let's pull it up. So it was basically more than double its usual daily volume today. What else we got going on at work? We know these names are running. The Works, the DocUs, the Zooms. So they have some juice behind them. What else do we have? Look at that candle. It was basing. It was just range bound, range bound, range bound. I've been trading work for a while. I'm in some 35 calls out to June. But boom, blasted off today. And it's got plenty of room to run. So what do we have? We have a huge squeeze. The average squeeze lists five circles. Okay, these circles, the black is a squeeze, the red is a higher squeeze. I can't count exactly how many that is, but that looks about 10. And it looks like the momentum just shifted upwards. So if we can get another blast off tomorrow, I think we can get 32. And if it gets really silly, we can get to that 34.52 range. So basically, if you see momentum in work tomorrow, just go for the calls. You could use 30.37 just because that's a fib level. That's the previous all-time high. So you could use that level if you like to have a strict level. A break of 30.37, take the 31s. I don't know if this trades in increments of 50 cents. Let's take a look. Oh, it does. Okay, so if these are like too expensive, like 50 cents, by the time it breaks that, I would move up to the 31.50 calls. And also look, the 31s got some nice volume today. The 30.50s got some nice volume today. The 30s got crazy volume today. So somebody that paid, let's just say 40 cents for the 30.50s expects it to be 31 tomorrow. So there's nice volume on the call side. Put side, not as much. So that's why I think this thing's gonna rip tomorrow, and I only really like it to the long side. Okay, so let's go back to work. There it is. And there's our targets. They're really on the daily. Like I said, daily in the squeeze, could fire tomorrow. Let's go to our 78-minute. Fired, still going. Riding up the 5 EMA on the 78-minute chart. Beautiful. 30-minute, lost a little steam at the close. There was actually a seller that just kept selling into 30, selling into 30, selling into 30. Do I have time and sales? I don't know if this will work. Oh, after hours, it's moving a little bit. Well, if you look, I don't know if I can get there. No, I can't go that low. So it broke. It broke after hours. So we're probably going to move that to the 31.50s. Actually, I'm going to do it right on the screen for you guys. We got to go to the 31.50s. 31.50s. And to be honest, they'll probably be 25 cents. Maybe, well, let's take a look, guys. Well, I guess when we can look. Okay, so the 31.50s. Yeah, they're probably be about 20 cents. Now we don't know where it's going to open. But 20 cents. They finally broke it after hours. But I was watching it. There was a guy holding us down below 30. Fired long on the 10-minute. But it looks good. Obviously a great way to enter something like this when we're looking for a long-only trade, which is what this is. There's your crossover. Get up your 5-minute chart. Get your stacked EMAs, okay? If we're lucky enough to get a pull back to the 21 EMA and the 5, that would be our entry. Now, obviously, if we get a pull and it's at 29, let's just say 29.88, what it's showing here, then we'd use our 31 calls again. But I have a feeling a pull based off of where it's trading now might be back to 30, so we can use the look at pricing. 31s to 31.50s, it really won't make a difference. Probably be 15 cents difference in the option, and what we're really looking for, like I said, is I hit the wrong thing. Sorry about that, guys. Work. There we go. Okay, and what we're really looking for, 31.97 would be a 1272 extension Fibonacci level. If we can get through that, we've got another fib cluster at 34.52. And trust me, I've seen it. These, you guys know these things can take off. The zooms, the docus, the work. So those are our 3 Lotto trades for tomorrow. I'll probably find more during the day tomorrow, which I'll post on Twitter Live, because we don't know where the market's going to open. Don't forget we have the jobs report tomorrow. So it's probably going to be bad, but we've been gapping up on bad jobs reports. So we'll see on that. And then one other question a few traders had for me is when to exit a trade. Let's take a look. When to exit a trade. So basically, if you got into work, even over here, and you're riding up the 5, okay? I use a 10-minute chart. You close. You test the 21, you close. There's no exit here. You can just exit at the end of the day or just roll it into something higher. Let's just say it broke and it got to, let's go back in time. That's kind of messy. I'm trying to find you one. Well, one place to exit a trade, okay, is a price target. So we're looking at this on the 10-minute chart. It's doing what you think. There's a 10-minute close here. Your second 10-minute close, you got a wick, so it wasn't able to sustain it. It pulled back down. And then your third 10-minute pulled down and closed below. So when you see these wicks and these wicks getting longer, that's an exit signal. Another way, if you just want to keep it easy, is a crossover signal. 5 crossing the 8. But if you could read these wicks into a price target, which happens often, that's the best way to exit. And the same thing to the downside. Let's see if I can find, if you're playing puts. I don't have a downward target here, but when you see a wick, then you see a wick and a close over here, right? Then you see another candle with strength getting above these 2 candles. Okay, that's when I'd close the trade, would be on this candle. And it's coming up to the 8. Or if you want, again, you can wait for the crossover to the upside. So that's how I'd use it to exit a day trade. And those are for day trades, guys, not for swing trades, not for long-term investments, just for the day trades. Hope you all have a good evening, afternoon. And if you have any questions, feel free to email me. Speak to you later. Bye.